5 EV stocks to buy on the dip. But before I get into this video, guys, be sure to grab your 2 free stocks on Webull. All you have to click the link in the description below, and it's $100 in your Webull brokerage account. You receive 2 free stocks worth up to $1,850, guys. Or you can head over to investortrip.com/Webull. So be sure to grab your free stocks and let me know which ones you guys got in the comments. Okay, guys, so as you probably know, the stock market is continuing to dip as investors chase higher yields on bonds. But the 10-year Treasury note yield is like 1.5%, guys. So, with the current money supply being increased at a rapid rate, we saw the US dollar basically diluted around 20% over the last year. If you're going to put your money into bonds with like a 1.5% year yield, with like the cost of capital being depreciated at like 15 to 20% annually, you're going to be losing money. So this is why I think that this is an excellent dip buying opportunity for EV stocks. And there's a couple of reasons why, guys. So if you guys, to quickly show you guys which companies I'm talking about, we're basically going to take a look at 5 main stocks. So the reason why I chose these 5 stocks: Tesla, NIO, Xiaoping, which is XPEV, ChargePoint, and Lucid Motors, which is going to merge with the SPAT, CCIV. The reason why I chose these stocks are simply because all of these stocks will be generating robust revenue. These companies have either vehicles currently being sold or are going to be selling vehicles in 2021. So I won't be including stocks like Fisker. I won't be including other companies that haven't really done a lot of revenue, like Solo and things like that. I'm only going to be including companies that are already generating revenue or should be generating revenue very quickly in the near future, and that's mainly Lucid Motors. So let's kind of take a look at some of these stocks. So if we kind of back up to a 6-month chart and we kind of take a look at all 5 of these companies, we can kind of see exactly what's been going on here. So of course everybody's familiar with Tesla. So these stocks over the last 6 months are actually, most of them are actually up over the last 6 months. As you can see, CCIV is the biggest winner, followed by ChargePoint, NIO, Tesla, and Xiaoping. So obviously recently a lot of these stocks are down, and if you guys ended up buying at the top here, you're probably down as well. So Tesla's down from 900, ChargePoint, NIO, Lucid Motors, and all of these other stocks are down as well. And year to date, some of these stocks have lost about maybe even up to 50% of their value. So if we take a look here over the year to date chart, we can see that CCIV is actually down about over 100%, down 50% from its all-time high. And a lot of that was hype, guys. A lot of people ended up buying the hype on Lucid Motors. What I'm going to do is give you these 5 stocks, which is the reason why I think this is an excellent dip buying opportunity for several reasons. So the first company we're going to start with, let's just kind of zoom out here to a little bit longer term chart. Actually, guys, let's pull up a 1-year chart here. We take a look at these companies. So the first stock we're going to start with is obviously Tesla. And the reason why we're going to use Tesla is because Tesla has continued to ramp up their delivery. So they delivered just under 500,000 cars last year, and they're on track to deliver around 700 to 800,000 cars with expansion in China, India, and in Europe, guys. So they also have been getting pre-orders for their Cybertruck as well. And this is an instance where Tesla's always been a choppy stock. There's been plenty of pullbacks in the past, but over the long run, Tesla has just crushed it. So Tesla still maintains a 50 to 60 compounded annual growth rate, and I don't expect any of that to change in the near run. I think this is a great dip buying opportunity for Tesla investors. As you can see, the price is just basically back where it was in November, guys. So obviously, if you bought at the top here, you're down, but I think this is a great opportunity to continue to add to your Tesla stake. So the second company I want to talk about is NIO. So if we kind of look at a shorter term graph here for NIO. So I'll just kind of take, so if you could just zoom in here, look at NIO. Okay, NIO, once again, another company that's aggressively increasing their deliveries at a rapid pace. Deliveries were up something crazy like 500% year over year. And even due to the Chinese Lunar New Year, they kind of had a small setback, as most of these Chinese EV companies have, but they're going to continue to deliver more cars, guys. So these stocks are definitely going to trade on deliveries and revenue over the long run, yet they're being sold off in the short run. So NIO's another car company. They lead China in deliveries. They delivered about 43,000 vehicles last year, and they should be on pace to increase that as well, yet the stock is crashing. So I think it's a good dip buying opportunity. The third stock is Xiaoping, ticker symbol XPEV. So this company's a little bit lesser known, but they're basically the number 2 Chinese owned car maker behind Tesla and NIO. This stock is another excellent dip buying opportunity. Their deliveries were up substantially, and they have 2 main vehicles. They have the P7, which is one of the best selling sedans in China. Really great company, guys. And they also have their own supercharging network. So I would actually say Xiaoping XPEV is more similar to Tesla than NIO is. NIO's a little bit different with their battery swap technology. They don't really have a supercharger network, charging network like Xiaoping does. I think this is another excellent stock to dip buy. And then the fourth stock is, as we say here on the list, is ChargePoint, guys. You guys been following my channel, you know how passionate I am about ChargePoint stock. I always like to invest in the most biggest, most dominant king of the industry in America, because if you are leading the industry in America, you're basically guaranteed to do really, really well. Look what Tesla's done over the years. Look what Apple's done, Amazon, Google, PayPal. Industry leaders in the United States can make you rich. It's really as simple as basically finding the industry leader in any sector, buying that, and you're going to do well financially when it comes to U.S. traded companies. So ChargePoint is the largest EV charging network in the United States. They just went public via the SPAC merger about 4 or 5 days ago, and the stock's been crushed. So a lot of people are saying that they ended up buying the stock at the top, like around $40 or something like that. But I still have a $3,000 future price target on this stock. So right now the market cap is trading at around $5 billion. I mean, it's just insane how cheap this stock is. Looking at a price to sales ratio, the price to sales ratio would be about 40. ChargePoint did about $150 million in revenue last year during the pandemic, guys. So this stock is just too cheap. As I said, industry leaders in America crush it. Most industry leaders in America have, at least $100 billion market cap. And I think it's ridiculous to think that ChargePoint is just trading at $5 billion. So this is a new industry. It's probably my favorite overall stock right now. It's just simply too cheap at $20. And like I said, this company is expected to grow at a compounded annual growth rate of over 60%, guys. And that's exactly what Tesla's done over the years. And you've seen what's happened with Tesla stock. And then the fifth stock that I have to mention is Lucid Motors. Now they're set to merge with CCIV via a SPAC. And this is a highly, highly anticipated company. The stock's currently trading around like $21 or something like that. And it's big money bought in at 15. Now there was so much demand for this stock that they had to raise the price from $10 to $15, which is completely unheard of. And this has a lot of big backers from it. So, of course, they have a lot of money from Saudi Arabia, but the demand for the Lucid Air, which is basically a huge competitor to Tesla, and this company is like Tesla 2.0. It's run by an ex-executive at Tesla. The car is so luxurious, guys, and you want to check out some of my previous videos on Lucid Air to kind of see exactly what this vehicle looks like. Be sure to check that out. But this is a huge, huge, huge SPAC deal, so much demand that they had increased the initial offering price. So right now it's trading at around $21, only $6 above what the institutions paid for. So I think this is another fifth company, and they're going to release the Lucid Air in the second half, and they're going to be generating a lot of revenues, guys. So these are my top five EV stocks to buy on the dip. Realize I did not talk about companies like Fisker. I did not talk about companies like Workhorse. I didn't mention Solo, RC Moto, any of these companies that don't really make money. So when you're dip buying these EV stocks, I'm not really going to recommend you guys go chase a stock like Fisker, even though, they said they're going to have their pre-orders and stuff like that. I'm looking to buy companies that are either generating a ton of revenue, which is all four of these except CCIV, or a company like Lucid Motors where people are in so love with the car they can't wait to purchase one, and they have over $650 million in pre-orders, and they're going to start deliveries in 2021. So a lot of these other companies like Fisker, they're not going to deliver vehicles until 2022, which puts a lot more downside risk in the short run. But these five stocks, I think, if you buy these five stocks on this dip, you're going to be pretty happy 6 months to a year from now. So like I said, guys, please do your own research, do your own due diligence. Never invest money that you can't afford to lose. But at this point now, obviously it's not been great to see, a lot of downside in my portfolio over the last couple of weeks. But like I said, guys, climate change is the #1 problem that we're dealing with on planet Earth. And these companies are fighting climate change. So do not bet against companies that are fighting climate change and going to improve our environment. Not only is it going to help with, obviously transitioning from, gas guzzling ICE vehicles to electric vehicles, but it's going to make the air much cleaner, guys. It's going to just make cities more enjoyable, and you won't have to cough when some of these cars pass by, and you're going to save a lot of money on electric vehicles. So this is just the beginning, and I think this is a wonderful opportunity. Remember now, when it comes to stocks like Tesla and ChargePoint and NIO, I'm not thinking about, March 2021. I'm thinking about, March 2022, March 2024, and March 2025. So all these stocks are moving in the right direction. Revenues are moving up, demand's moving up, yet the price is going down, which creates a nice buying opportunity. So I hope you enjoyed this video, guys. Please smash the thumbs up button if you enjoy my content. Smash the red subscribe button to receive more videos from me. Be sure to check out my daily Stock Watch newsletter on Substack, and be sure to check out my private Discord chat. You guys can talk more about these stocks. That's until next time, guys. Take care.